All right. Let's cover this trade from this morning. It's a losing trade, but it was a winning setup because, well, actually, yeah, it was a loss, but it was because of the spreads. After that, it took me out anyway, but it hit TP, so therefore I want to cover this trade, and that's what I'm gonna do. We're gonna break it down. So, first of all, let's get these sessions on so we have a better idea where we are and what happened this morning. So, as I said yesterday, we have this bearish range and we have this 4-hour POI. We took this previous daily high now. Just mark it on real quick. It's not relevant for this trade. And then we have this 5-minute POI that took the liquidity from here. So it took like this internal liquidity, this trend line, so disruption of highs, and then pushed price lower to break structure. And therefore, this was my area to look for shorts. Initially, I took one short here, which resulted in a loss, and then I went for another short here, which took me out and then hit my first TP. Unfortunate, nothing I can do. 2 losses today. I have a lot of losses, but it's part of the game, and it's going better. Mindset is going better, so that's good. So anyway, so we had this area, disruption of highs, strong area above this wick as well. So it's a good area to look for trades. And if we zoom in, what can we see? We can see that we have Asia highs over here and we have our previous daily high. So yesterday's high. And that yesterday's high is taken out by Asia. And then I was like, okay, I can look for shorts. No, I can't look for shorts. Why can I not look for shorts? Because the 1 minute turned bearish, but the 5-minute didn't. And I want to see at least a 5-minute bear structure after taking Asia highs to look for shorts. So in case I want to trade from the 1 minute, I need to trade from the 1 minute without like 5-minute bear structure or 15-minute bear structure. I need Asia high to be taken and some internal range liquidity to be taken in a POI. So POI got tapped. We had a 50-minute POI over here, a 5-minute one as well. As you can see, this one, that one got tapped as well. So that was where my first short came from. Over here, we'll discuss it in the daily recap. But then the short, we came into the 5-minute POI, took Asia high to previous daily highs, and we took the internal range liquidity. There was more internal range liquidity in terms of this London high, but for the short, it was valid and price proved my setup to be valid. And this was a manual entry, therefore it was higher. My initial entry was from here, but price spiked up. This is where I clicked. So that was very convenient in one way, but then there was this spike, and this was the actual trade. So this was a 1 to 4.7. And I was like, okay, now it's spiked above. This would be my TP because it's a bullish break, and I will go break even after this. And oh, why? Oh, this was for previous daily loss. Here you go. If the 5 gets hit over here, this 1 to 4.2. Perfect trade. Don't want to ask more from the market. Why? Because we came in with, so we took the highs. We have a trap high here or a trap order block. Why is this a trap? There's no, this bearish break is not from a high that from a new high. It's just like this is, how do I explain that to myself as well? We got a low, a high, a higher low, a high high, a higher low, and then this is our high high. And after that, we didn't like break structure. So this was the last low that led to a high. So in order to break bearish, we had to get below this low. And yeah. And basically this bearish break was then an early seller maybe, but that's the mistake I made because this is not a low that led to a high. Therefore, this is not a valid break, not valid early sellers. However, because price reacted from this order block like this, I was like, okay, we can maybe class this as our early sellers. What's the wrong thing? It's not in the plan, so quite off plan, but like was a bit creative. It was creative. I was right with that. Then coming up here, we get our real early sellers. Why? Internally, we get a high, low, high, high, low, high, high, bearish break, bullish break, bearish break. Done. That's all right. So I was initially looking for a direct entry over here. We get a high, a low, premium deliver, bearish break. That means that we have all our confluences for this trade, and we can look for continuation trade based on the ranges. What can we see? This high over here took out the internal range liquidity for this leg, and then it took out this how do you say it? This high, because liquidity, like small liquidity grab, disruption of highs, and then strong push to the downside. And this was where my direct entry came from. Some internal range liquidity, some distance away, like yeah, only 3 pips, but still we trading from the 1 minute, so some distance away from the order block. Entry came from here, and price actually on over here it tapped 415. On MT4 it tapped 413, which is over here, which means my stop loss wouldn't be hit, but spreads took me out anyway, and that's a bit unfortunate. So I think this candle included the spread, and it just took me out. And then straight after 1, 2, 3, 4, 5, 6, 7, 8 candles, 8 candles, within 8 minutes it hit my TP. So initially my TP was over here, my 80% was over here, but after we broke above this high, it means a bullish break, and then you can draw on this bullish structure, and you can actually say, okay, we go break even after we tap in here. But I was like, okay, we broke above, we got to push to the downside, and then we respected this. So we go break even after we break this low. We have this beautiful order block over here, which could be followed, and don't go break even, because this could be liquidity grab, and because this was just minor into the discount, into the premium, that could be a liquidity grab to push down. That's why I wanted to hold the trade. I was out of the trade, but just my thought process was like, okay, then I want to hold the trade and reduce my stop loss over here, go break even over here. Why break even? Because we have the bullish range, so it shouldn't be reduced, but break even. Bullish break. And that's the thought process behind it. And then we broke below this low. That's actually beautiful. 4.618, so 4.7. Yeah. And that's basically the trade. And after that, we just pushed up. We came back to break even, respected this order block, inducing more sellers into the market, pushing down, and then buyers take over, respecting this order block, which is more valid because we broke bullish, and then long trade comes from here. You could class this is your, you broke above. This is then your early buyers. Okay, let's leave that for another case study, but actually, let me just see. So there's no POI to trade from, maybe on the 5 minute. So we came below these lows, we came into the fair value gap, we tapped, just missed the 5 minute POI. And then you have a bullish break over here. Early buyers taken out. And then no bullish break, but yet we build up some liquidity over here in the form of this trend line. And that's then taken out by respecting this order block, and we go bullish. So yeah, just some soft thoughts. Where the law, all right, that's a case study. Peace out for the short. For the short, by the way, it's not about the long, it's about the short trade. The long is just something I was noticing.